was extremely strong for you this quarter, Abhijit. One of the strongest quarters for decorative in the last few that we've seen. Talk to us about sustainability of the kind of growth that you're seeing and margin expansion. How much of that was led by decorative? If you can give us a perspective.
So, there were two reasons for this growth. One, of course, was in general, an improvement in the sentiment in the market as well. So the volume growth was there in high single digits. And coupled with that, there was a price increase which we had taken because the raw material prices had gone up. So we had taken a price increase there. The net impact of that was about 5.5%. So overall, therefore, these two put together resulted in a good double-digit growth. The operating margins also were maintained at quite a strong level. And therefore, even in terms of operating profit growth, there was a double-digit growth. Overall, in PAT, we recorded about 29% growth on a consolidated level.
Abhijit, you're confident about your Q2 margin improvement despite higher cost inventory. Beyond Q2, what will be the key factor that will sustain margin expansion? And do you still stick to the guidance of 15 to 17% margin for FY27?
So quarter two should be good. So far July has gone by. August also looks, reasonably good. So even though the prices had gone up and there was some sort of a feeling that, there was some amount of stocking up which had been, resorted to by the dealers, that it might impact sale in the month of July and August. But that hasn't been seen. We saw a reasonably good growth in both July and so far in August, it looks good. So we are quite hopeful that, the quarter two also will be, and this time, the complete price increase effect will also come in. So we should have a decent double-digit growth in quarter two as well. Going forward, will we be able to maintain the margin guidance? Yes, we should be between 15 and 17%. That's what we are looking at. So I don't see any reason why we cannot maintain this margin. Normally, what happens is in the first quarter, the margins are at a much higher level. So we were beyond 17% actually in quarter one. Quarter two, the value decreases a bit because it's a seasonal effect. In monsoon, typically the total sales of all paint companies goes down a little bit. And then again in quarter three and quarter four, it moves upwards. And when the operating margins also improves, so we are, reasonably certain that we will be in the 15 to 17%, the range in which we operate in operating margin. We should be able to maintain that as well.
And you indicated some market share gains in Q1. Which regions, product categories are driving that market share gain for you? And where are you losing market share? What's your current market share status? If you can give us an update.
So current market share is around 19 to 20%. That's where we hover. Sometimes it goes up a little bit, sometimes but we are around that range. In quarter one, we did well in certain product categories, especially the premium category of both interior and exterior emulsions. We had very good growths. Construction chemical and waterproofing and wood coatings. These three segments grew well. In terms of geographical spread in the south and west part of India, we did relatively better. Those are relatively weak areas for us in terms of network, but we have been focusing on these areas, and we see good traction happening. Gradually, it is improving as far as we are concerned in the south and in the west as well. So that's how it is. So far looks promising. The year which is ahead of us.
Abhijit, how is the mix between premium, mid-market and economy products changing, and are you seeing consumer willingness to trade up?
So nothing much has changed as far as the mix is concerned. More or less, as has been historically the case, There has been, always an upgradation which is happening from the lowermost strata to the economy category. Then from those who are using economy, they move towards premium, and the premium guys move towards the luxury category. So there is no specific trend as such. There has been an upgradation at all levels. So some people are coming in who are not using paint, possibly using lime or cement paint or something of that nature, or not using paint at all, are coming in for the first time in the economy category. And there are people who have shifted from economy to premium and then on to luxury.
Hmm. Uh, Give us also a sense of what's happening. Waterproofing and construction chemicals are growing faster than paints. What percentage of revenue could these categories realistically contribute over the next 3 to 5 years?
So yeah, this is a nascent category and it's growing much faster, because there are still lots of areas where they are not very well aware of the use of these products of construction chemicals and waterproofing. And hence, as things progress, as we educate the people in the industry, the consumption continues to increase as far as waterproofing and construction chemical is concerned. The growth rate, therefore, is significantly higher than the paint category itself. As far as this category is concerned, this will contribute possibly in next 3 to 5 years to 20 to 25% of our sale. As of now, it's around 11-12%, but I think it should keep rising because of the sheer fact that it will grow at a much faster pace than paint.
Hmm. So, how much price hike have you taken so far since the Middle East war began, and how much price hike were taken in Q1, and how much we've been able to pass on the full price hike, and any more price hikes is expected if crude remains at current level?
So in decorative, we were able to pass on most of the price increase. About 9 to 10% were the price hikes taken in stages from April till June. Uh, Overall, if you look at it, in the industrial section, we haven't been able to so far fully pass it on. There was some absorption which happened in quarter 1, but in quarter 2, we have taken further price increases both in protective coatings and general industries, where we have some good presence. We are a leader in India in both of these segments, and in those segments, we have just initiated price increases. So that will improve our profitability in this quarter and going forward as well.
So Abhijit, with 7.5 to 8.5% of price hikes which has flowed into Q2, are you confident that volume growth can remain in the high single digit throughout the second half?
I'm reasonably sure that it should happen because the market has so far been able to absorb the price increases quite well. Going by the growth rates, even after the price increase happened fully, both in June and July, we were reasonably well placed. August so far it has been decent. So therefore, I see no reason why we cannot have that high single digit type of a growth rate in terms of volume happening. The value differential, possibly because of the price increases that have happened, will remain unless the raw material prices drop and we drop the prices in the second half, in which case things might change in terms of the value volume gap. But otherwise, more or less, it looks that we should be able to maintain the high single digit volume growth.
You get significant volume from West Bengal, and there has been a transition in government which has affected project execution in the quarter gone by. Now that the government change and the consequent infra push is expected, do you expect volume growth to come back in West Bengal?
So as of now, it's in a flux because a lot of changes are happening in the system, the people, the policies itself, which have to be announced, by the 15th of August, we are told that the new industrial policy will come into play, and they will announce that. And subsequently, I presume that it will give a boost to the industrialization process of the state. Along with that, some of the infrastructure projects which were held up have got kicked off. Some new ones have been announced. So I think, in the next 6 to 8 months, we will see, good improvement as far as the state of West Bengal is concerned.
Abhijit, thank you very much for joining us today and giving us that perspective on the quarter and what's expected in Q2 and the